What's up, traders? So today we're going to talk about two different stocks that are under $30 that are showing amazing growth potential. And then we'll look at potential trades in order to make money off of both of them. Now, if you're new to this channel, my name is Rashad. I'm a full-time options trader, and I make the bulk of my income from doing just that. Now, pretty please, before we begin, go ahead and tap that like button. And do remember that I'm not a financial advisor, and this is not financial advice, nor is it a recommendation to buy, sell, or hold any equities or options contracts. All trading comes with risk. But y'all already know how I get down. I always start off with a word from God that has to deal with money, wealth building, or business. And today's word comes from 1 Timothy 6:17. It says, "Command those who are rich in this present world not to be arrogant, nor to put their hope in wealth, which is so uncertain, but to put their hope in God, who richly provides us with everything for our enjoyment." Put simply, money is just a tool for us to do better things with our time. But if we focus on the money will disappear. But if we focus on God, He will provide everything that we need. And speaking of some individuals who are absolutely getting blessed in this market, I have to shout out a few members of the Trader Freedom community. So Danielle says, "I've been squeezing every penny out of every quarter of my life and added 10,000 to my account." And we can see she made over $510 in the past month. So over a 5% return for her. That is amazing. Shout out to you, Danielle. And then we have Justin. We can see he printed over $44,975 just in the past month. So those are crazy returns. And who needs a 9 to 5 when you're printing that type of money, right? Then Scott says, "I started trading the wheel strategy in May, joined the group in August." Says, "The Lord is answering some prayers as I have been in ministry for 3 decades. And for the first 18 years of it had 0 retirement savings. Well, glory to God, I am catching up." And he shows some of his profits down here. So shout out to you, Scott. You are doing amazing. Corey says, "Second month in the group, not groundbreaking for some, but a blessing to me. Thanks for the guidance." And we can see he did 9% just in the month of October. So shout out to you, Corey. Then we have Tyler, who also printed a ton of money. And if we click on here, we can see he made $11,591 in October, although he only traded 10 of those days. All right, out of the 31 days in October, he only traded 10 of them, and he wound up with $11,591. So can't even imagine how much he would have made if he traded every single day that the market was open. But if you know somebody who is looking to Trader Freedom, tell them about the community. The link is below in the description. They'll get to see my trades when I enter them. They'll have access to the course. They'll have access to ask me questions at any given time, and they'll be within a community of other traders who all have the exact same goal. So if you know anybody, links below in the description. But with that, let's get down to business. Now, this was an interesting week for the markets. We received some bad job data for October that had the market selling off for the majority of the week. And this was close to the worst week in the market that we've had since April. Now, as we can see over here, these are the weekly candles for SPY. And you see it came all the way down here, but then it recovered. So on Friday, Congress was getting closer to possibly coming to an agreement to reopen the government. And so the rumors of that had the market going up higher. And while that did not actually happen during the day, it sounds like they are getting at least closer to a resolution. And so we have 2 potential bullish catalysts that could be happening possibly within the next week. One, if Congress reopens government, we'll likely have a nice green day on that day. And then secondly, if the Supreme Court rules that the president's tariffs are illegal, then I could see the market having a bullish day on that day as well. And they both could come here within the next week. And so it will be interesting to see what happens after that. But then the next catalyst for the market will be, of course, NVIDIA's earnings, which is like the Super Bowl for the market. But I want to discuss 2 different stocks that are under $30 that I think have a bright future either way. And the first stock we are going to talk about today is Lyft, ticker symbol LYFT. It doesn't need any introduction. We all know it's a ride-hailing service and they are competitors with Uber, but they just had their earnings and they did amazing. And so with that information, I want to give you my top 5 reasons Lyft could keep climbing moving forward. Now, number 1, they had record revenue and bookings. So we can see that the revenue was $1.7 billion, which was up 11% year over year. And they had $4.8 billion in bookings, which is up 16% year over year. All right, the way that Lyft measures their revenue is they first deduct whatever they have to pay their employees first. And so that's why the bookings number is much higher than the revenue. But the only thing better than revenue is net income and free cash flow. And so number 2 is they had a profitability surge. $46 million in net income, with EBITDA, which is earnings before interest, tax, depreciation, and amortization, was up 29% year over year. All right, this is a company that just became profitable a little over a year ago. And ever since then, they have not looked back. Every quarter, they seemingly make more and more and more. And as an investor, that should be exactly what you are looking for. All right, number 3 is rider growth. They had 28.7 million riders, which is up 18%, with 249 million rides in total, which is up 15%. So they are absolutely expanding their network and engagement. And then number 4 is they are working on strategic expansion. And this is by autonomous vehicle partnerships and luxury transport acquisition. And so let's discuss the first one, autonomous vehicles. Well, as we can see from up here, the difference between these numbers is mainly what they have to pay their employees, the people that drive you around. Well, if they are able to reduce that amount of money, then that will make the net income increase by a huge amount. And so as autonomous vehicles get better and better and their partnership with these other companies grow, this could be a huge increase to their bottom line. And so that is what I love the most. But then on top of all of that, number 5 is after their earnings, they gave a bullish guidance. And they are expecting Q4 bookings to be up 17 to 20%. In this quarter, they went up 16%. For the next quarter, they're expecting 17 to 20% year over year. And so those are 5 reasons why I think that Lyft could continue to grow from here. Now, here we are at the chart for Lyft, and we can see it's doing pretty well over the last few days, obviously because it had amazing earnings, so it's been going up ever since. But it closed the day around $22, which is getting even closer to its all-time high. That was on September 17th at $23.50. Now, right below it, it has support at $20 because that is the 50-day moving average. And we can see that there is clear support right here around this about $19.50 area. So let's just say the $20 area has clear support for Lyft. And so if it wanted to continue moving higher from here, it absolutely has what it needs in order to do so. But another thing that I want to point out is the gamma exposure. Now, if we look at the gamma exposure for Lyft, we can see there is huge positive gamma exposure right at the $22 strike. And so there are a ton of people likely buying calls at this $22 strike. And so there's a good chance that the stock price at least stays around this area, if not goes higher, because now that it is closing above 22, it may be some form of support. Although it only closed at $22.04, so it's not too far away. However, if the stock price does come down below that, this positive gamma may act as like a pin. So kind of pinning the stock price to that strike of $22. And so if I were to trade this stock today, what would I do? Now, as we said, we know that it has some support at least around that $20 level here. Now, I like the idea of calls because it is clearly having bullish momentum. However, it is so close to the all-time high, which is at $23.50, that I'd rather use a little bit of precaution. And so what I love to do is I love to sell puts while I wait to see if it will set up for a perfect leaps opportunity. And so what I'm going to do right now is I'll look at a possible short put position. So if we head over here to the options chain, what I may do is select an expiration probably about a month out. So I may come over to this date that's 35 days out from now. And I want to go somewhere around that $20 mark because I'm absolutely fine with buying the shares of the stock if the stock price were to drop below our strike price. Okay, if we're selling puts, all we're doing is agreeing to buy the shares at the price that we select. Now, what I may do here is I may come up to this $20.50 strike. And so if we select it, we can see that I'll get about 87 cents, aka $87 per contract for selling this put right here, right now. Now, if the stock price were to drop below our strike price, then we have agreed to buy the shares at that price. However, the premium that we received, which in this case is 87 cents, will go towards our cost basis. And so $20.50 minus 87 cents is like what, $19.63. And so that would be our cost. And so technically, once you're assigned the shares, you could immediately sell the shares if it was anywhere above $19.63. But of course, as option sellers, we would just turn around and sell covered calls. But this looks good to me. I'll collect about $87 per contract. And then from here, we can choose however many contracts we like. And I always like to kind of dollar cost average into a trade. So let's say, for example, if I plan on doing 15 contracts total for Lyft, then maybe I'll do 5 today, maybe I'll do 5 the next day, and then 5 on the next day, right? I never like to go full in for my position all at once. So let's say I'll do 5 contracts for today. And if we come over here and we look at the P&L curve, well, we can see total, I'll make about $435 for this entry of the trade right here, right now. And as long as the stock price stays above our strike price, then we just go home with that $435 and we sleep good at night. However, if it drops down below our strike, well, we could make less and less and less and less. And then our break even is right here where I said $19.63. But if the price were to keep dropping, then the contracts become worth less and less. However, we were fine with purchasing the shares at that price. And so it's a win-win situation. Either you wait and get paid to wait around and nothing happens, or you get paid to wait around and get shares of a stock that you really like at a cheaper price than what it was when you first looked at it. All right, and so that is Lyft. And I just want to show you this article over here because I'm just now noticing just about 3 hours ago, it looks like Goldman Sachs increased its price target for Lyft from $21 to now $26. All right, and so I am not the only one that sees good things coming for this company. But now let's move on to the second stock. And the second stock is one of my favorites, SoFi, ticker symbol SOFI. I'm not going to bore you guys. You all know about SoFi and the amazing things that it is doing, but we can see it was up 3.87% today and it's currently $28. And man, we in the Trade to Freedom community have been building out an amazing position in SoFi. And we went even more aggressive yesterday when it had this huge red candle. And obviously it immediately paid off as the stock was up today. But looking at this chart, it clearly has support right here at this $25 level. All right, it bounced off of it right here. Then it came down somewhere near it here. And then we can see literally today, it went down and it said, no, we're going to go right back up. All right, so $25 is a clear support level for this stock. Now, looking at this article that was just posted today, it says, is SoFi's technology stock a buy after another record quarter? It says shares have fallen roughly 14% since the earnings release, even though both earnings and revenues handily beat estimates. This pullback appears more like a short-term sentiment correction rather than a reflection of fundamentals, as the company's performance and outlook continue to strengthen. All right, so we can see their net revenue here, and it looks just like a staircase, which is exactly what you want to see from a company. Constant and consistent revenue growth, net income growth. That's exactly what you want. Now, taking a look at their members, same exact thing. Constant and consistent growth, and look how much they're growing by. 2022, they grew by 51% as far as members, then 44%, then 34%, then 35%. And while they're also growing their members, they're also expanding their product catalog. And so that makes it even better because they can cross-sell more products to more members. And from there, it just kind of works like an avalanche because the money you can make just gets bigger and bigger and bigger. All right, and so it says right here, the firm reported 1.4 million new products with 40% of them opened by existing members, demonstrating increasing cross-sell strength. The momentum reflects the success of SoFi's integrated financial ecosystem, where members use multiple services across lending, investing, and banking. All right, so now right here, we can see the products, which are also growing rapidly. And so I am liking every single thing that I am seeing from SoFi. So let's go ahead back into the Moomoo platform and look at a potential trade. And now for SoFi, until it can stay and remain above that $30 psychological level, I'm going to continue to sell puts on it over and over and over again and continue to get paid while I wait around. All right, so I'll do the exact same thing for this that we just did with Lyft. Let's go to the exact same expiration date, 35 days out from now. And from here, like I said, we have amazing support at that $25 level. And so assuming that sticks, let's go ahead and select that strike. And we can see at the mid price, we'll get about $102 per contract. And so that looks good to me. Let's assume I want to do the exact same amount of contracts that I did with Lyft. And so I'll do about 5 of them. And so I'll just come over here to the P&L curve and we can see for this trade, I'll make about $510. And I just need for it to stay above that $25 mark. Then I keep my money and I go about my day. But if it goes down, then I am agreeing to buy the shares at that $25 strike. And that is exactly what I want to do because I want to purchase shares of SoFi because I think it's an amazing company and I like it even better at a discount. But let me know down in the comments below if you like either SoFi or Lyft. And again, if you're looking for an amazing community to join, come and trade to freedom with us. But with that, I will see you guys on the next one. Peace!